Welcome! We're here today to discuss a topic that's on everyone's mind: taxes. Taxes, as we all know, are a crucial part of our economic framework. But wouldn't it be great if we could legally reduce our tax liabilities? Today, we're going to explore this intriguing possibility. From strategic debt usage to aggressive investing, we'll cover 7 strategies that, when used correctly, could potentially help you legally never pay taxes. So, are you ready to dive into this financial journey? Let's dive into 7 strategies that can help you legally never pay taxes. First off, one way to avoid taxes is to stop earning money. Now, this doesn't mean you stop making money altogether. Instead, the trick here is to shift your income source. The wealthy, for instance, often show the taxman they didn't earn any money themselves. How? By making money from investments rather than direct income. This shift can significantly reduce your tax liability. But remember, this strategy requires careful planning and a solid understanding of investment principles. Our second strategy involves using debt in a strategic manner. Consider the approach of tech tycoon Elon Musk. Rather than selling off his Tesla shares, Musk borrows against them. This allows him to have access to large amounts of cash without triggering a tax event. Essentially, he's using his shares as collateral to get a loan. The interest on this loan is often less than the tax he would have to pay if he sold his shares. Plus, he still retains ownership of his shares, which could potentially increase in value over time. Now, it's important to note that this strategy does come with risks and requires careful management. If the value of the collateral drops significantly, one could end up owing more than they borrowed. However, when done correctly, using debt strategically can be a powerful tool in your tax reduction arsenal. Thirdly, maximizing deductions is a key strategy in reducing your tax bill. So, how does this work? Well, imagine you're a business owner or a side hustler. Every expense that is directly related to your business can potentially be a tax deduction. These deductions could range from office supplies to business travel, or even a portion of your home if you use it as your office. But here's the catch. You need to know what can be deducted and how much. That's where hiring an accountant comes in. An experienced accountant knows the ins and outs of tax laws and can help you find as many tax deductions as possible, ensuring you don't pay more than you need to. Remember, it's not about evading taxes. It's about being smart with your money. By understanding the tax laws and taking advantage of the deductions available to you, you can significantly reduce your tax liability. By maximizing deductions, you can significantly reduce your tax liability. Now let's move on to investing more aggressively, earning from real estate and utilizing home sale exclusion. When you hold on to an investment for more than a year, it qualifies for a lower long-term capital gains tax rate. This means that the longer you can keep your investment, the less tax you'll pay when you decide to cash in. It's a great way to build your wealth while keeping Uncle Sam at bay. Next, let's delve into real estate. Real estate investments offer a variety of tax breaks. One of the most significant is the depreciation deduction. This allows you to show a loss on your tax return, even if you're making a profit from your rental income. It's like having your cake and eating it too. Lastly, there's the home sale exclusion. If you sell your primary residence after living in it for at least 2 years, you can make a tax-free profit of up to $250,000. And if you're married, that number doubles to a cool $500,000. Now, that's a tax break worth moving for. These are just a few of the many ways to leverage investments and real estate for tax benefits. Last but not least, you can leverage what's called a 1031 exchange. This tool is a gem in the world of real estate investments. So, how does it work? Well, it's all about selling one property and reinvesting the profits into a larger property or portfolio of properties. Here's the kicker. By doing this, you can defer paying taxes on the sale. That's right, you heard it correctly. You get to roll over the gains from your old property into the new one, essentially continuing your investment without having to pay taxes right away. But remember, it's not a simple sell and buy scenario. There are specific rules and timelines to follow. For instance, you have to identify a like-kind property within 45 days of selling your old one and complete the purchase within 180 days. This is a powerful strategy, but it requires careful planning and execution. So, there you have it. 7 strategies to legally never pay taxes. From strategic debt and maximizing deductions to aggressive investing and real estate tactics, the power to lessen your tax burden is in your hands. Remember, knowledge is power. By educating yourself financially, you can make informed decisions that benefit your wallet. So, keep learning and keep growing. Don't forget to subscribe for more informative videos like this one. Thanks for watching.